Welcome to Quickshots.
Hello. Welcome to Quickshots. It's me, Alex. It's him, James. We're back.
We
Hello.
are back.
Now, James has given me a little bit of a brain overload for my daily. Instead of jumping on social media, he said, "Why don't you jump on Wordle?
Wordle.
Little New York
Look it up.
Times thing. It's actually a nifty little game. So hopefully I'll
That's nifty.
get a little bit smarter.
Give it a run.
That one.
Give it a run.
All right, first one's for you. This is from Lani. Actually, a very interesting question. I don't think we've been asked this before. Why is compound growth better or more effective in real estate than compound growth in shares? Ooh.
I think, Lani, first of all, I would say compound growth in any asset is fantastic. I find I'm probably a little bit more conservative than most. So I like the fact that with real estate, you can leverage and borrow money
Yes.
a little bit better and safer than with stocks and property. You know, with stocks and property, stocks you can probably, depending on the person, borrow about 50%, whereas with property, you can borrow 80 or 90%. And with property, the value day-to-day, month-to-month doesn't really matter, whereas with stocks, you can trigger what they call a margin call. So if the value of the share drops below a certain mark, they'll want you to put up some of your own money to top up the difference to make sure that you only owe 50% of what the stock is worth. Whereas that doesn't happen with real estate, provided you continue making the repayments. So, look, I guess that's why I slightly prefer it. I would say, though, that any strategy that gives you compound growth is fantastic. But, yeah, that my preference is property for those reasons. Over to you for the next one. I've got Govinda here, and I'm actually interested in your views on this. I see that you guys talk a lot about Brisbane and Adelaide at the moment. Which do you think is a better place to invest today out of the two?
Oh, don't make me decide. Okay, so both of them are up 10% on this year. So from start of the year to where we find ourselves now in the middle of June. So they're both doing really fantastically. And I suppose on an affordability comparable to Sydney and Melbourne, Brisbane and Adelaide are absolutely smoking it. A lot of job opportunities there, great affordability, and great lifestyles just generally. I wouldn't say one is necessarily better than the other, but let's just assume for the purpose of this exercise, you own no properties and you can afford to buy in either. I would say with that beautiful silver platter that you've got, you should be owning property in Southeast Queensland, in Brisbane, first and foremost, if you can afford it, because they've got the Olympics in 2032. So there's got a massive infrastructure pipeline, a lot of jobs being pumped in, and we always talk about property being a long-term thing. So knowing that the Olympics are in the pipeline, I think that does put Brisbane slightly ahead of Adelaide. However, in saying that, Adelaide is fantastic from an affordability prospect. You can still get into that market for $500,000 if you're lucky, slightly under or slightly over. You can still get a really good rental yield. So there you are slightly more cash flow positive in Adelaide than you are Brisbane. So if you can only afford Adelaide, it's still a fantastic investment. A lot of our clients are sort of gone a little bit more on the conservative side, or they need that positive cash flow in order to be able to buy. So they've gone in Adelaide, and it's worked out absolutely fantastically for them. But I would just say either is wonderful. But if you've got the option of both, which not everybody has, Brisbane should be your first and foremost.
Nice.
This is a fully loaded question from one Toby for you, cuz. Feels like a lot of Australians own investment properties. It just sort of does feel that way. Is it as it seems?
Ooh, yeah,
loaded
geez,
question.
loaded, Toby.
Fully loaded.
Look, roughly 2 million Australians own an investment property. There's 26 million Australians today. There's 10 million households, though, so you're probably better off going by household. That would mean that around 1 in 5 of all households own an investment property, which is reasonably high. If you break that down, of that 20% or 1 in 5, 14% own 1, 4% own 2. So the vast majority own 1 or 2. Slightly under 2% own, or slightly over 2%, own 3. and less than 1% own 4. In fact, it's only 87,000, which is not a lot.
No.
Of people throughout the entirety of Australia.
Pretty
And a
interesting.
fun fact for you, which I didn't realise when I went on a bit of a deep dive to find out the answer to Toby's question. 43% of all investment properties are valued at less than $500,000 according to the ATO.
That's interesting.
Another 32% of property investments are between $500,000 and $1 million according to our tax declarations. And there's around 25% that are worth more than $1 million. That surprised me. I thought that was a very, very high number of investment properties to be worth more than $1 million.
I mean, it kind of just the first stat that you put out there with most of them being valued under 500,000, it sort of cripples that myth, if you will, that only the really wealthy are property investors and own investment property. Absolutely not the case. So very interesting.
Apparently 1 in 2 investment properties are units.
Also not that surprising.
May contribute.
Also not that surprising. Hey, congrats on doing a lot of that deep diving. I don't know where you find
You're
the time.
welcome. You've had the public holiday. I thought I'd help you out. Thank you, everybody. Send us
Good
your
for
questions if you got them. We love to hear from all of you, and we do hear quite a bit. So hope you got a bit out of that, and have a great week.
And I bid you farewell. Thanks for listening to another episode of The Double Shot with your favourite cousins, Alex and James Fitzgerald. If you've got a burning question or something we absolutely need to talk about on the pod, please write to us. Both of our emails are in the show notes. For little real estate tidbits and a little bit of banter, a lot of banter, you can follow us on the gram. Our handle is thedoubleshot.podcast. That, my friends, is thedoubleshot.podcast. Until next time, think of us when you sit back and sip your next double shot.